Good morning. My screen is a little blurry today. All right. So markets are consolidating bullishly. We've been talking about, support, resistance as we always do, trend. And coming out of this trading range, we have multiple time frames in uptrends. I'm starting with the cash SPX today. And a little drawing thing out here. So, higher highs, higher lows, right? And, yesterday we were looking for, if there was a drop out of the range that was there, this gap fill as a probable area where buyers would step up. They should step up, meaning in an uptrend such as this one, where we've got multiple time frame alignment, the most obvious place to everyone is where buyers should step up and confirm the trend, and that's what happened. So markets are up here this morning on what else? More China news, right? Yesterday I think there was some negative China news. I didn't read the whole thing, but then this morning it's like, what did it say? Agreed to canceling tariffs in phases, which I guess is a moving target, right? How much of the tariffs, what are the dates, so on and so forth. So we're going to be plagued by this China tariff thing. It's not going away. And it's always going to be something that, we've been dealing with it for a while, that can gyrate things from day to day. But what we've seen is that the buyers are always there on the dip. Sometimes the dips look a little uglier than other times, but whether it's a gap fill, minor support, major support, one of those reference points is where buyers would step up. Now, we've also talked about the fact that, things are going up here for several weeks in a row. And today, as you know, is Thursday. And look at the bar that we have here. It's a little tiny, little narrow-bodied little range there after a gap up. So obviously things are stalled, and it's just normal for investors and traders to say, hey, you know what, this has gone up over a month, a very nice amount of time. I'd like to get in on a pullback. But so far, after the start of the week there, and a push up, and then the next gap, and things are just kind of like chopping. And we got, I guess, what I would just personally refer to on this time frame as a immature bull flag kind of a pattern, meaning it just needs more work to do. So we'll see. Yesterday there was a bottoming tail bar, so obviously the buyers stepped up on the dip down there and into the gap fill, and you can see that there. So bullish price action, and now we're up above that. I have to go to the spiders or the futures, see exactly where above it. Is it up at the top of the range or in the middle of that range or what have you? But anyway, bullish price action, and we'll see where things end up here at the end of the day tomorrow. Anyway, as things are up here, and we look tomorrow for the spreads on the SPX, but we'll see if this holds here today. It's already above, holds here today. That's going to become a short-term important line in the sand. Let's not forget there's other unfilled gaps down here below. So we're always monitoring, like I said, multiple time frames. Nothing much is going to change here on the weekly time frame. Nothing short of some really unexpected news, but we'll see where this bar ends up at the end of the day tomorrow. So far, we've just got a slowing momentum bar, and after a gap up, it certainly does open up the projected thought of, could there be a gap down on Monday? And then, as we all know, the different candlestick patterns, we've got a, I forget what it's called, an abandoned baby or some deadly doji, I don't know. But if we were to get this bar like this at the end of the day tomorrow and Monday it gapped below it, it would be some bearish pattern. And so we'll see. We'll just see what happens. Gap above it, I guess we start pressing the accelerator since we'd have a consolidation here on the daily chart. So we'll see how that unfolds. Let's look at the diamonds. So just chopping around here. This is a bad tick. That's not real. Just chopping around here, gapping up above 276.45. So gapping above this range. Well, that's interesting. So pullbacks into that range should be buyable. And another gap up. And these gap ups haven't gone very far after the gap. Actually, you see all of these were red candles, so they close below, but we've got this choppy consolidation, you can see right there. Not doing much. When we look at the futures, we'll get a better insight. Spiders, there's the pullback into the gap fill area, and I don't know that that's a bad tick there. Let's just look, maybe SSO gives us some clarity, which is the leveraged. Yeah, so doesn't trade as much, but there's no crazy tick in there. Anyway, gapping above this range, 138, 10-ish. So we got a gap up from a bottoming tail bar. And like I said, most of these haven't gone very far, so we'll see what happens. Qs. I don't know if that's real or not. When we see look at the futures, we'll be able to tell, but gapped above the range. So more bullish price action, but weekly time frame still just a narrow range. It's just, really not going very far. And so overall trends are up. So bullish until proven otherwise. Futures, S&Ps, there's the pop and just consolidating there. So when you get a wide range bar like this, and we've talked about this before, it's not supposed to come down to this support here. It's supposed to create support. Now, one of the concepts from Master Trader Technical Strategies is that if prices have traded below and above an area to the left, we view it as being neutralized, meaning there's really nothing to the left here, which is bullish to have a bar like this. However, I also say it's the weakest link in the chart, meaning there's no support here. So it's supposed to create support. So that power move up, wide range bar, buyers are supposed to keep coming in and create that support. So looking at, say, a 5-minute here, you can see the power move. And as it pivots, right, I would define a pivot as a bar with 3 higher lows to the left and right. As it pivots, that has created a reference point of support where buyers should want to step up. And we see that's happening, but they're not getting it moving very far to the upside. So we're also getting, right, a reference point of resistance and another little trading range that's developing here. So from a very short-term point of view, going into today as a day trader, well, if it clears here, right, we look for prices to go up. And if it breaks below here, which it's already done once right there, and it was a little shakeout pattern, but if it can't clear this one, that swing, and then it begins to drop, well, you already know. Similar situation here, almost exactly the same in the Qs, the futures for the Qs, and that little dip, and we'll be keeping an eye on that at the open to see if it's going to roll or not. I got into trip. Yeah, but I got out of trip at least a week ago, Nick. That thing wasn't acting right. Just reading comment in the green room here. Yeah, and you're supposed to know about earnings. Yep, that's a rookie mistake. I've done it many, many years ago. And the pain of not checking, it will definitely reinforce that you won't do it again. Yeah, it did not act well at the time. I forget that play. I forget when we did it, whatever. Maybe it was around here. And one of those days, it was just kind of sloppy and messy, and it just wasn't doing what I had expected. And now here's the earnings, and there you go. So as Alex is pointing out, 30-minute low sometime. Where is it? Just to try and help out here, 37-ish. Well, here's the good part. It's gapping down to support. All right. So a lot of times, if there's shorts in here, if there's a larger short interest, they'll buy to cover. So it's gapping down into the support here. And I doubt very much it's going to get back up to this high, but it could have something of a bounce. We'll see. Breaks below the low, and well, it's got room to fall, but we'll see what it does. YM, actually the stronger. Look at that, right? So we talked about this earlier in the week about it bringing up the rear, and joining the party, the new all-time highs, and actually not pulling back. So it's getting a little stronger, getting above that range. It was dipping, but kind of leading the way to the upside. Oh, that's a good thing. Excuse me. The Russell's getting a little whippy up here, up near that prior resistance point. You can see the range that it's in. Buyers stepped up there, just coming up to the top of the range. And so what I'm seeing here doesn't appear to have some great opportunities, long or short. So maybe we're in for more chop, but we'll see how it unfolds. Oil's coming back. It got, in a little range here. What Dan calls a bear sandwich. That bar is still working, but you've got a nice size green body and a big red bar that said, hey, that's supposed to go down, but it didn't follow through. So a close like that is bullish and saying, hey, this can continue to push up above this most recent range, and the weekly chart rather supports it. Right? Bottom of the range, green reversal, red bar ignored, big green bar, bottoming tail bar. There was a buyer on a dip. So that looks good. And theoretically, it should be able to clear the top of this little range, intraday range that it has there. You can see the nice uptrend on the 5-minute. Bonds. Here's the fly in the ointment, kind of, for equities going higher. Well, this is really, getting a bit of a slamming here. It's down well over a point. And it's right on this major support point here at the bottom of this range, which kind of tells me better keep an eye on this, because if the buyers step up here and start pushing it up, equities are going to come in. The other side of it, of course, is if it can break below here, well, it opens up the door to, the next level, which is pretty far away. And then, equities could have a nice rally, but we'll see. So we'll be keeping an eye on that. And gold is down here, and, it was up yesterday a little bit, flip-flopping back and forth. I'm talking about this weekly chart trying to curl, and it certainly looked like it was going to do that. Equities got some legs, and it's kind of that inverse relationship that's been going on. And the gold buyers went away. And so far, let's see. You can see the pivot low, pivot low, pivot low. Every time it gets down here, buyers step up, and we'll see if it can get turned around. And silver's been looking pretty much same. We're acting in the same way and just kind of chopping around here. So we'll see if it can make the turn. As we always do, looking at the transports. Right? They've already made their move. And coming up to the top of the range as they have, even with this little peekaboo above there, historically, these should consolidate a bit and chop around, which again leads me to believe the upside for today should be somewhat limited. And lastly, we'll talk about the sentiment here, which is the moving average is in between these bands. It could push a little more in this gap up. We're going to keep an eye on these wrong way option traders. They got a little bit more bearish as the market's consolidated, and I'm sure their call premiums got squished as the market's had this grinder here. But on this gap up, we'll keep an eye. If they step back up to the plate buying a lot of calls, it's going to put a cap on the upside. So it's the bias for today is don't get chopped up, because that seems to be what we're going to be in store for, but we'll play it as it unfolds. All yours, Dan.
Yes. Yeah, good morning. Sorry, folks. There was a call there. There's a problem. I had to talk to this guy. All right, all our opens are fine. Looks like IBM, we have a put spread gapping down, but we're still fine on the put spread. All right, let's go right to opens. IQ, 1856, nice gap. There you go, gapping right over this pivot with a price void. I got Roku here in the upper right, but I have them on my other computer. So yeah, IQ, if we can get a double bottom now on the 15-minute chart, then that looks good. AERI, wow. If this was not gapping down, then that was a beautiful close for a bottoming pattern. But, that's not what happened. So that's a very bearish gap down here. We'll come back to it. Seco, 1645. Okay, this one's gapping too big. DXEM, wait, it's gapping, wow, all-time highs. But just, I like showing you examples of what a tier 1 gap would be. And if it were gapping, anywhere here, the low 160s, then you have a beautiful price void. It's gapping out of this multi-month trading range. And that would have been fantastic. But again, it's not what's happening. I can't tell where it's gapping. 40 minutes, I can't tell what's going on there. No, it did. No, Robert, it didn't gap up over the void. It gapped up over resistance with a big void. I think that's what you meant, but just used the wrong term. It gapped and has a void. 871 bearish gap, but no pattern. Ooh, Party City is not having a party. Wow, this gap in the all-time lows. You know what? I don't know. I'm no retail expert, but I've never thought that was a good business model. Party City. So, same with that Tupperware store. Who wants a public company just selling plastic Tupperware? Look how damaged that thing is. ZTS looks good. Gap not excessive. 126.50. Yeah, but the problem is McGraw. It doesn't pass the first test, which is gapping with a nice gap on the daily with a price void. unless you just want to day trade, it's gapping to the middle of a range with a wall of resistance at 128 to 129. Compare that to the one we just were talking about, DXCM. I said, if it was gapping here, then it has a price void all the way to 170, $10. That one does not. 852. No, and then also look at this IQ one that I put up here in the upper right. This one's gapping right over this, and I have a price void up to low 19s. Tiva, 852, nothing going on. C's. So that's why I go through these very quickly and rapidly. All I'm doing, look, all I'm doing is looking at the number of where it's trading. So 2670, and all I do, McGraw, is then see where 2670 is, and it's gapping to a ton of junk. So I have zero interest in that. This Ralph Lauren, the gap's too big. It's gapping way the heck up here, 114. But here's another example. If it were just gapping here to low 103s, then look, my weekly has room to 110, 112, and it's already trading over my target of 110 to 112. So I got no interest in that. NRG 4050. Okay, so this one, it's gapping to resistance. If it were gapping here to 41 bucks, then that would be a tier one. You got your shock, gapping over multi-week resistance, and a price void, 42 area. But that one's still worth watching, what I call a tier two, because it ain't going to be ready in the first 5 minutes. But if it can claw its way into this within the first 30 minutes, and then it bases at 41, then it's turned into a viable candidate. But I'm just making up what ifs, right? Scenarios. And that's why, I say tier 2 and 3s, I need more time. They have to develop more. MT, I think, is a steel stock. Okay, so this one's a gap, but the price void is not big enough. I noticed we have a put spread on X. I noticed it gapped up a little bit. Ka 50. So see, I'm just looking to see where it's trading. 54.50. It's a bullish gap, but it's not tier one. The gap's too big. AMC 988. It trades like garbage. I have no interest. Alpha Golf. Look, I'm just going to delete this. It's flat, and I got resistance above, support below. I'm just going to delete it. ABC, it's same. There's no volume here, but it's a sloppy mess. Now sometimes when I delete these, I might look at them in the afternoon or tomorrow and say, wow, look what that did. So the only way around that, if you wanted to, is just set alarms. But I'd rather not have alarms on 100 things. I'd rather winnow down my list to 20 watch list items. Square 6190. Now I have no interest in this unless it gets over this bar's high, November 4th. And then it's a sloppy bottoming pattern. See how the MAs are flattening, but it's not ready. There's nothing to do. Trip, you all talked about. Yeah, that's a nasty gap. Win had a good, nice gap. Remember we were looking in here to sell a put spread right on the turn, little breakdown failure. That's nothing to do. Gap into 125. Fit, that's the buyout. Expedia, nasty gap, 115. But look, it's too big. Wow. Wow, Expedia. Oh, is that why Trip's down? Or did Trip have earnings? Because it's same sector. That's a nasty gap, and that's bearish. That's bearish action pre-market. Gap down, no bounce, bearish consolidation, new lows right now. That's being dumped. 72.50. There's no pattern. CTL 1365. I mean, it's a bullish gap, but McGraw, just hypothetically, if you said, hey, Dan, fundamentals say it's going to 17, the weekly broke out, then I would say let it chop around sideways a couple more days to prove itself. Fossil 950, so that's a bearish gap way the heck down here, but percentage wise, it's too big for me. Fox A 3376. Weekly, all right, this ain't bad. All right, that one's worth watching. I'll put them here. Coming out of this bottoming here, the 2050 curling and the price void. Well, say the target's not that big. MRO, oil, 1264. 1895. Okay, I like this one better. Now see how this one's gapping? See, this one's gapping just over these with a price void. So this one I like. Oh, but is that bio, Nectar? He sounds like a bio. Look at my IQ in the upper right popping. See, that was a favorite gapper, but I'm not chasing. That's just in my plan. I don't buy in the first minute. PBYI, maybe 30-minute low. That's a bearish gap. Qualcomm, excessive gap. Alex, CBS yesterday. Yeah, I remember you said that. It was nice. Gulf Delta. McGraw, put spread here would be a no-brainer if there's any juice with the 177.50s. Coming out of that, big old mess. Oh, look. Q's using the pre-market data could be it made a lower high, and it could be in the process of making a lower low right now. So I'm not rushing into the longs. So what did I say? 177.50 for next week? Nope. 25 by 55.